Happy Monday, Aaron. Can you hear me, Aaron? You cannot hear me.
We're going to get technical. Get technical.
Happy Monday, everyone. Hopefully you can hear me. Aaron cannot, it would seem. How's everyone doing? Give us a 1 in the chat if you're feeling
I might
good.
need to restart my thing. I can't hear you right now.
Still got another 9 months until that brain is fully developed. How's everybody doing? I actually don't have admin control over my own stream right now because we did the Benzinga small cap conference the other day, so I had to switch like my account, and it's for some reason locked me out. So I'm a guest on this stream right now, and I can't control anything. So I'm relying on producer AB.
Well,
AB,
I had to just restart the thing, and now I can hear you again. But the first time couldn't hear you for some reason.
Okay. Yeah, that seems to happen every single day. The Blind Trader, I am doing wonderful. I hope you're doing well as well. XME metal. Woo! I think oil too. Guys, how good is it when everybody else is freaking out about the market and how it's not doing well, but you did your top-down analysis and have been watching the sectors that have strength and have had focused most of your capital into those strong sectors. It's comforting. It's warm. Yeah, everyone heard your Get Technical bars, Aaron.
That's my most significant IP, intellectual property.
Mm-hmm.
For those that might not know what IP is, now you know.
Yep. We will find a way to monetize that jingle. All right, guys. I don't have too much prepared other than I want to get your stocks because I'm not prepared. So give me your picks and we'll look at them. I think my man Aaron had a pick, though.
I did have a pick.
What sector is it?
All.
All right. So
they do a few different things. Let's throw the ticker is let's
lay the stage.
All right, we'll lay the stage. So first, it's in the oil, but they do a couple different things that I like going on right now. But yeah, we're looking at XLE right now, which is of course just the Spider Energy ETF, which has been showing some signs. I'll let Neil go over the actual technical signs of XLE.
What do I even need to say about it? This is a monthly chart of XLE. Look at it. You had 2 solid months to get in here.
See what was that? What we're looking at right now, I call that the Big Dipper.
Yep. The Big Dipper is a very good name for it. So we've got a downward trend, and then we have a reversal pattern to get us out of that downward trend and then into a confirmed upward trend, where you can see that we had this sloping line here that we just couldn't break above, and then we finally broke above it in February, meaning that this became a strong sector, so that the stocks in this sector were mostly moving upward. So we're liking the oil this year, liking the oil. So what's your ticker?
So the ticker is H as in Holly, F as in Frontier, and then C as in Corporation.
Holly Frontier Corporation? I know that one.
Yep, that's the company.
Ooh, that looks similar to what we just looked at.
Yep.
Remarkable. Whoa. Remarkable.
So some background on Holly. I'll disclose I do have a small little position in this company. They're making, they do some jet fuel, among other things. lubricants, some petroleum, some modified asphalt. So we're talking about, they've got their toes in a few different ponds here.
All right. I like it. I'm trying to get my toes in a couple ponds. That's for sure. So we got to pull back on the monthly here. Let's do the thing. Oops, that's not it. This is it. So on the monthly, just not breaking past this 236 line on the Fibonacci. That's what we're watching for. So let's zoom in down to the weekly. Looks like a pretty nice spread between red and green, and we're starting to round up here. Would be really nice to see something like this. Very nice to see something like this. Would expect resistance up at the previous high here, the recent high. If we bounce off, then we're into little cup and handle territory. But the bigger picture, as with all oil stocks, of course, is resolution of our reversal pattern. So we're looking at the weekly chart for Holly Frontier Corporation, HFC, where we've been doing it for a while, folks. And yes, we'll look at X. We got to look at X. We got to look at that young steel stock that everyone loves, United States Steel Corp, because XME Metals ETF is showing serious sector strength here on Monday morning.
Love that. Can you do me a favor? Can we go see what is that peak right before the market kind of crashed from COVID? Is that right before that?
So the market crashed on basically March 15th.
Right.
So in 2020, what is this peak? Like this?
Oh, it started crashing before that then.
Yeah, all oil was going down. So we had growth stocks going up like this, and then value stocks going down like this. just up. One was going up, and one was going down. But then something happened. Growth stocks started doing this, and then value stocks slowly started doing this. You dig?
I dig. I just didn't know. I would have expected it's still that big drop. I see the COVID drop off now, and it was already after that a little more straight down than that first down slope.
Yeah, I mean, Tesla is cooking. Everyone's talking electric vehicles. The story is batteries, power storage. Cathie Wood is on top of the world. On top of the world, thinking about that presidential run. Who's buying oil stocks back then? You know what I mean? Yeah,
didn't Kramer say something along the lines of oil companies are uninvestable or something like that?
Kramer says literally everything that's possible to be said. Any arrangement of words, Kramer has said it.
I guess that's what happens when you've been on TV for a while.
Yeah. At any rate, we're just looking at resolution here for our double bottom pattern. So as pointed out by producer AB, we had this sustained downward trend, and then when COVID came, we were gapping down. The cables broke on the elevator. Oil was going down. HFC here seeing the same exact thing that all of its peers were seeing, with very few exceptions. So let's box it in. Should we change the song or just keep letting that one song run?
I kind of like it. It's some good vibes.
Yeah, I like it too. All right, let me get my rectangle out.
Based on the Fibonacci, what would be a good, level to look for since I did get into this recently?
So you're trying to use me for trade advice right now.
Well,
that's what you're on. That's why you're on camera right now. This is just to boost your portfolio.
Yes and no. Through technical analysis on Get Technical, we're gonna identify for me a selling point. If it hits this, I'm out, right?
So, reminder, this is for entertainment and educational purposes only. This is not to be taken as investment advice whatsoever. And full disclosure, there it is, full disclosure, producer AB does hold the asset that we're looking at, HFC, and we are going to analyze it using the Fibonacci. But first, let me just box in this trading and look at how these resistance lines here, right, box in the meat of the trading on the weekly chart for HFC, which we use for our double bottom analysis. Lines up perfectly with the lines that we have drawn for Fibonacci. So I already did the Fibonacci for you. I anchored it on the low on the 2nd of November 2020, and then the high on the 8th of March 2021. Now I'm just going back in time because technical analysis is all about looking back at what has happened in the past to help us forecast what might happen in the future, right? Producer AB?
I dig it. I dig.
Producer AB logs into his Tinder account and completely zones out. All right, Producer AB, we're getting there. Stick with us. All right. So resolution of this pattern would be the depth of the meat of the trade down to our double bottom here, where we hit these two resistance points. Blop, blop. And then we add this line to what we call the neckline, which is that meat of the trading. Give it a little horizontal treatment, and you can see that it beautifully, elegantly, almost divinely lines up with some key levels that we were hitting here. Boom, resistance, pullback. Boom, resistance, pullback. Come on, baby.
We need to see a breakout. Come on, HFC.
Yeah.
Come on.
The passion of a man that has recently bought. How long have you been holding HFC?
Since about last Friday.
All right.
Like I said, they do a couple different things, but I like the production of jet fuel right now. I think a lot of I don't know if you've flown recently, but I've flown like. No, you haven't?
Nope. No, I haven't flown. Dude, I haven't been on vacation in like 2.5 years. I haven't left my apartment in 15 months. I haven't worn shoes in 15 months.
All right, someone in the comments, we got to get Neil out of the house. Maybe
No,
we'll go...
no, bro, you can't get. I'm never coming out again. I like it here. It's safe.
We could do a little camping trip or something. We'll get you out of the house.
Yeah, you know I'm that kind of guy. You find out on a camping trip.
Yeah, we'll play real life. It'll be like real life Skyrim or something, you know?
Oh, well, you put it that way, you might get me out there.
Yeah, exactly. We'll play live action Skyrim. No, what's the one where you're just like going around nature, like doing random stuff?
There's a lot that are like that. Just going around nature, Minecraft.
Yeah, we'll do real life Minecraft.
Yeah, I'm going on this trip with my coworkers. We're doing real life Minecraft.
We'll just bring a couple pickaxes and start chopping things. Maybe get in some legal trouble, but
I'll be honest. I don't know if I want to do that with you, but you are doing a good job. You're doing a good job of pitching that. All right, so here's the scoop, dude. We're hitting resistance here at 36.46. We've got a breakthrough. We are looking at the weekly. Yes, I know. We're not in overbought territory, so that means that we're not going to just we're not going to sell off on its own. I would say you're right where you want to be at 59. This could be a momentum play. Of course, it's not the heyday of the summer of 2020 in terms of momentum. Let's get down to the daily here. Ooh, and look at it, just playing with this line over and over and over. Let's see if we can draw any type of wedge. I would like to find some tightening here and maybe see if we've got a descending bear wedge. Not really looking like it. I gotta be honest with you. Yeah, maybe. Yeah. So a case can certainly be made that you've got a descending bull wedge, rather. But what you're going to want to see, my friend, if you anchor your lines to the highs, these swing highs here, it's going to be more like this. You're going to not only want to see a break above 36 and some change here on the Fibonacci, but you're going to want to see a breakout from this pattern, right? And how do we know when it's broken out from the pattern?
When it gets above that resistance line.
Not only that, But what are the conditions? At the end of the day, you need to see a day candle close firmly above that line of resistance.
So we're looking for a big old green candle here on the daily.
Yes. Above that line. And then you'd be targeting this line because you know you're going to hit some resistance there. But then a breakout above that, you're targeting this line because you want to see a resolution of your double bottom.
I dig. I might throw a little stop loss in here at like $35 or something, just to, in case it starts going the way I don't want it to go. Then I'm out, and I'm no stress. I'm chilling.
So no stress chilling is a good thing. We're advocates of that here. What I have to say is when you have these patterns, you're usually looking for 3 touches on that upper line of resistance. Looks like we've got 3. And you want the breakout to happen between about halfway and 75% of the way through it. So you want it to happen right about now. So you want the breakout to happen here, or you can expect another touchdown here on this inclined support line, and then want to see that breakout. If it goes for too long, I say just drop it and find a better opportunity that's actually doing something. But we shall see. We shall see. All right, guys, I do want to get... I'm not an agoraphobe. You know what? Producer AB, can you put the Get Technical branding on?
Yeah.
I'm missing my rats.
I can do that.
Guys, I'm not an agoraphobe. Just lazy. And guys, if you guys get us some likes on the video, if you're enjoying the content and you want us to hit your tickers, throw us some likes.
Yeah, we're gonna need at least. Well, we got I see about 280 people here. We're gonna need at
280 million people here. Lots of people. We got 280 million
billion.
US watching. Billion.
We're gonna need at least 100 likes before we bring on our guest, Chris.
Chris Capri.
Yeah, I was
baby.
kidding. I knew how to say it. I was seeing if you knew how to say it. You passed the test.
No, Rual, all good. I'm like the step before agoraphobe, whatever that is. All right, let's look at live. Let's see what it is. Is that Live Nation? Is that a reopening play? Live
Little
Ventures.
concerts.
Just live. Is that the Live Nation thing? Is a holding company which engages the provision of online marketing solutions to small and medium businesses.
This is
blah
not
blah
Live
blah.
Nation.
This is not Live Nation.
Live Nation's stock is LYV. FYI.
So let's look and see if we got the golden cross with the 50-day moving average crossing the 200-day moving average. Yes! Yes! When you see these rounding bottoms, guys, when you're looking at a stock like LIVE, Live Ventures, and you see that downtrend, and then you start circling around with all your rat buddies, and you say, this might be getting something to nibble on here. Watch for that golden cross, which is, of course, when the 50-day moving average on your daily crosses above the 200-day moving average. That is when you can start to really expect this thing to turn into a true rounding bottom. It's a great early indicator for my favorite chart pattern. Absolute favorite. So when I look at this, let's just keep it simple here, folks. We got the golden cross, right? Chia. Great point to enter and hold that puppy. Now we're looking for hitting this previous high here at 71. What's it gonna take? Oh Lord, get that out of here. Let's just take a look at its behavior when it gets into the overbought zone. Overbought, little bit of a tumble. Let's see, went down about 37%. Sheesh. When this thing gets overbought, it really tumbles. So it looks like we are coming out of, one of those recent tumbles here. But then, following that overboughtness, we got a bullish engulfing candle, meaning the daily candle, the body green candle was bigger than the previous one, usually a big sign of a reversal. However, we are getting some serious selling pressure today, ahead of earnings is what it looks like to me. I would say wait until after earnings, see how the market structure, all the market participants digest that information, and you would see that as evidence on the price chart before you find your entry. But something that you can do here is find a moving average that this thing is obeying. My favorite, the Bollinger Band on the daily. I would wait for a touch either on the median or on the bottom of your Bollinger Band. Not just a touch. Let me back up. Don't wait for a touch. I would wait for the bounce confirmation. So we want to touch it, and then we want to see a candle going in the other direction. So we shall see how far down it goes after earnings. Good sign of health is if it doesn't pass this 20-day moving average on your Bollinger Band. Would be a great entry for this ziggy-zag up to your goal of resolving this rounding bottom pattern for a price target of $71.97. Let's go.
That's a big base.
You can say that again.
Just say it once. Big old base.
All right, let's hit. Thanks for giving us the like, guys. Keep those likes coming. That is what gives. That's what guarantees that we're able to provide chicken wings for producer AB to eat every day. If we don't get them, he only gets scraps from Jason Raznick. And we know that Jason Raznick really likes to work on he does the twist move with the flats, with the wings, he does a twist move, and that he really works like all the cartilage off of those things. So there's not much there. So if you want to get producer AB something more than just those bony scraps from Jason Raznick, make sure you hit that like button. Boys got to eat.
Yeah, we need about 38 more to hit that 100 like goal. Otherwise, we may just have to cut off the stream.
I'll shut this whole thing down if we don't hit 100 likes. I'll tell you that right now. And cut Aaron off from the chicken. Scorched earth approach to the YouTube algorithms here at Benzinga.
I'm so hungry, guys.
You want to see my dark side come out? No problem. All right, what's next, guys? What is next? We're looking at DraftKings.
Donkey Kong.
Donkey Kong. First off, this is a murder scene. Get out the chalk and draw an outline of the body of these candles. All right, we were on a nice. I was loving DraftKings for like 2 weeks. I was loving it. Trading options. That's when I was first starting trying out the options day trading strategy with those in the money Friday calls and puts, using the 8 and 21 exponential moving average on the 10-minute chart, in and out. I was bragging to Luke Jacoby saying I just hacked the stock market, and then they ruined it for me. It is not healthy. Here's my take on DraftKings. We like stocks that have the wind behind them. We like to get on boats that got the wind blowing in their sails, not in the opposite direction. All right, so we got saved at support. That's cool. Let's try out the Fibonacci here.
So you say you're doing same day trading options on both sides on it?
Yes, sir. That's Brad Weber's. That's Brad Weber's strategy. Straight from him to the T, exactly what he told me he does. I did it and it worked, and it's awesome. He has a show, check it out, called Technically Options here on YouTube, and he has a Discord at tradinggrounds.live. You're able to get access to that. Yeah, no, true. I got way too cocky with that options trading strategy. But it was fun while it lasted, and I blame the stock. It's not my fault. It's not the trader's fault. It's the stock's fault. Which is terrible advice, right? It's always on you to make the best decision. The stocks are going to do what they're going to do. All right, so you can see that we're kind of holding around this level. I want to see what the pivots have to say. I mean, ultimately here, look at this. DraftKings is super, or has been. Let me get to the weekly. Okay, so it's still got some ways to go. You guys probably can't see this, so I'm going to make it thick with 2 C's for you. Chunky. All right, so this is the RSI. We're trending down lower into oversold territory on DraftKings. No surprise with this tumble on the RSI, which is our momentum indicator. And then on the daily, you can see that the day that it got the absolute peak here down at 19.5 on RSI, this thing hit this support and turned around and is kind of just holding this area here on the Fibonacci. And again, the Fibonacci, I just anchored at the bottom here, and then at the top, really the way you want to be using your Fibonacci is always anchoring it at your swing highs and swing lows. That's really how that works. I can go into more detail on that, but I don't want to spend too much time on it before Chris Capri comes on the show. But with DraftKings, I mean, if you have conviction about it, which I think there's a good fundamental case for it, it is on sale right now. It's not in a great trend, but this oversoldness is indication of a bounce. However, I'm not seeing a big green bar coming in response. We had that previously, but it's dissipated a bit, right? So on this day that it got super oversold, that would have been a great sign to go ahead and enter with some conviction, and you would have gained. That's like a pure like short-term swing trade or even a day trade, almost 10%. That would have been sweet just using RSI, baby. But I want to see the price structure return to something a little bit more manageable. So I'm not using just RSI alone. The two together work great, just like me and producer Aaron Bree. So I'm not in the control chair here. I can't see, but is Chris here?
He is indeed.
All right, guys, it is my extreme pleasure to bring on our illustrious guest that comes on every Monday, Mr. Chris Capri.
Oh,
hello. What's up, everyone?
Not too much. How's it going over there?
Very good. Interesting start to the Monday.
Yeah, I would say so. What does that look like for you?
So a couple things I want to talk about. I'm looking over this weekend, just kind of checking out data on the Options Clearing Corp and volatility. The Mideast and the inflation's things going on have definitely created an uptick in volatility. Mm-hmm. And we can see that in the VIX. In fact, if you look at all the US indices, they're all down except for the VIX. And, so if you look at VIX last week, we had a pretty interesting move, from 17, you're talking up to 29. That's a pretty big jump. And then it almost round tripped all that within a matter of a week. So if you think about it, we had volatility in the S&P index tick up. Some volatility sellers came in towards the top, started to push it back down. But when I look at what was happening in the options data, the large indexes, the SPX, you look at that, those are the institutions. Retails trade SPY, big institutions trade SPX. They bought put protection, when this thing was ripping. And so they're buying protection. They haven't really unwound that protection yet. So on the other hand, you have retail, which actually bought the dip in the markets. So somebody's wrong here. Either institutions or retail is wrong in this one here. Either way, I'm suspecting volatility is going to be an issue, not just short term for, say, a week from now. I'm thinking that also a month from now to at least mid-June, we are going to have some volatility kind of issues pop up in the world, in the markets. It could be another Israel-Palestine thing kind of going on. There could be all kinds of things going on that could cause an increase in volatility. So that's kind of what I'm expecting. And so, I'm kind of watching VIX, and I'm also watching VVIX, which is volatility of VIX. Another way to think about it is the volatility of volatility. So, if VIX moves, say within a range of like, say 10 points or something like that, then we know the volatility range that VIX can expand. But that doesn't have anything to do with the frequency in and of itself. If that volatility starts to happen more rapidly, then the volatility of volatility is increasing. And that's kind of what I'm seeing in the VIX and the VVIX, which also had a rip and a push back down. So this morning we bought about right around 2060. We bought the 2123 bull call spread on VIX, and we did it short term and 1 month out. So we did next Wednesday's expiry, and then we also did, which I think is the 26th, and then we bought the June monthly expiry, which I think is the 16th. So we did the same thing, 2123, 2123 across the board. I think we're going to get an uptick in volatility. And I think there's just all these little situations out there that, the jobs report, potential inflation, the Israel thing going on in Gaza. I think all these things kind of just are showing that it didn't take much for VIX to pop, 8-9 points. And that's, if it only takes a little bit to do that, then that means the market is leveraged long and they don't have a whole lot of downside protection. And when you don't have a lot of downside protection, the volatility can increase. So we like the VIX. We like being long calls or long bull call spread, more of the bull call spread because volatility on the VIX right now, implied volatility is a little bit rich right now. So that's the first one we're looking at. T, which had some news today about potential merger and things like that, or not merger, but more of like they're going to acquire some other company in technologies. So when I look at that and I look at what's kind of going in the options activity in T, I see that, we have a fair amount of gamma, a lot of options rolling off this Friday, about 45%. And the market's long, roughly 1.9 million calls and roughly 1.3 million puts. But I also see something here that has kind of broken out of a resistance, which you can see, here, here, and here. This is a false break. We hit it again, resistance. We hit it again, very short sell-off, and then we push past it. So I feel like T is becoming a buying opportunity from an options perspective. So if T can get down to around 31.65 or even 31, then I like getting long the 32, 34s, or maybe just getting long calls. Implied volatility right now is super low. It's around 20-25%. So calls are really cheap on T. So you could just do outright calls on T, or you can do bull call spread on T. But I like getting long T. The closer we get to this 31.58, the better it is. So I like getting long AT&T. I would probably do a June expiry on this one here. Give it till June to kind of play itself out. If it kind of doesn't really do anything, if we don't get much of a bounce because we've got monthly OPEX for May this Friday, then you could wait until early Monday next week and load up on the options. So that would be one potential play on T. XOM oil play. We bought the 6062 last week, and XOM is kind of, showing. Let me show you kind of what we were thinking on XOM. So let's go 4 hour. And let's expand this out. So we bought it last week. We felt like once it recovered the 60 barrier, kind of saw it below it. Once it recovered that, it should be, it basically was saying, hey, if you look at it, here's the breakout. Big extension beyond that. Aggressive sell-off. Buyers came off 60, but then some more selling came in. But then it just stalled. And so to me, I feel like it hit a bid. Once it got below 60, value buyers were saying, this is kind of undervalued at this point. Probably some option dealers are like, we really have to start hedging at this point. And so we have to get long, XOM at this point. So I'm looking at this. I'm like, somebody was catching a bid here because this selling pressure should have created a deeper extension. It didn't. Next day, it recovers this, bounces off 60 and higher. So we bought the 6062. I feel like XOM now is showing enough strength to make it to 63, 50, 64. So with that being said, what am I looking for on XOM? I think looking at the 5-minute right now, there's not a whole lot of volume today going on. The market's just definitely kind of under in terms of volume levels, but the structure is bullish. This is building pressure to try and clear this 6160, and it's just floating above the gold line, which is the VWAP. So I think XOM you could do, if you get a dip back down to 61, then I think the 61-63 bull call spread is solid. If it doesn't make it back to 61 and it presses into 61.70, 62, then I think a 62-64 bull call spread wouldn't be too bad. Looking at real quick on XOM, let's see what IV is right now, just to see if people could get long calls. And looking at the June, IV is 32%. So the 62.5 call for the June expiry is only $1.79. Not really worth it because you'd need that to get to 420 or you have to get that to 64.20 just to get to break even on that. So I think in this case, you could do the 60-62, or you could do the 62.5 to 65 bull call spread on that one. And you get a little bit better pricing on that. So I'm bullish on oil right now. I'm still liking it. I think XOM is a solid play on that. And X, you guys were all talking about it. X, bullish on X. Let's take a look at the 1 hour, which I think is a great chart. And I think it's really just showing us where people were saying, hey, there's a little bit of a line in the sand here. So you do have this head and shoulders kind of forming. Neckline right over here at 25. Top left shoulder, head, and sort of a top right shoulder. But you look at this sell-off, and it finds an aggressive bid here. Comes right back down and just stalls again. So somebody is buying and absorbing at 25. And it feels like it's much more stable at 25 now. Even when we got a brief dip below it, the next hour is bought back up and popped right back above 25. So I think dealers and market makers are saying, like, look, we don't want, like, at this point, we have to be hedged. We have to be long X on this one here. It's just too cheap for us in terms of pricing and options, and basically for us to not hold this line. So a 25 bid just continues to come on in. I think it's a perfect play for an underlying if you want to be long the underlying. Super tight stop on this one here. Maybe 50C on this one if you want to get a little bit more in it. But on an options play, could get long calls. You could do the 25.27 since we're almost right at 25. Once we get to 25.10, you could do the 25.27. You could even, if you wanted to go a little bit more ambitious, maybe the 28 or the 29. It'll be a little bit more expensive, but more profit on that one there. So X to me is another solid play. And then Aaron had one on HFC. I took a look at this one. Here's my thoughts on HFC. And then I will do open callouts. So HFC, not a whole lot of options activity, 35,000 calls, about 11,000 puts, but 52% of that is rolling off this Friday. So there's more calls than puts. It's supporting the market, but half of all the options are rolling off this Friday. So I think with that being said, and then we have monthly OPEX this Friday, I don't see HFC breaking this resistance here at 37. And I don't like getting long at current levels. So a couple plays on this one here. If you feel like this resistance is going to hold, you could do a 37-35 bear call spread. If the puts are cheap enough, you could just get long puts at 37. I think at 35, it starts to maybe find some support. And once you start getting to 34, 33, then I think it's going to find a bid. I think it's just going to, any selling pressure, unless it's aggressive, is going to get absorbed there. So you could wait for a move back down to 34 and then look at long calls there. Maybe the 34, 36 wouldn't be a decent play. That could be a pretty decent play on that one there. But for right now, I'm feeling like we're not going to get above 37 or 38 this week. And because of all the options rolling off, I think towards the end of the week and Monday, this is going to kind of have a downward slide to it. Not aggressive, but a pullback because that whole options board has been wiped clean, and therefore the support has been wiped clean. So another alternative is if today or tomorrow we get a dip to say 35, iron butterfly, which means that you want it, you could do like a 35-38, and then it would be a 35-33, and you basically just want this to close range bound for the week. Not above 37 and not below 34. And if you could do that, get at least $1.65, maybe $1.85, $2 credit, then it should be a decent neutral play on that one.
Hey, chat. Hey, real quick, chat. Give us a 1 if you feel confident that you'd be able to construct an iron butterfly.
Ooh.
And give us a 2 if you would not feel confident constructing one.
Yeah.
I got to go with a 2 there. I don't feel confident with the iron butterfly.
So we'll just wait for the lag.
We should have a day just on covering the iron butterfly. Maybe we should have a day
100.
just covering the iron butterfly.
Yes.
Explaining how it works. Justin Goodman, he's one of my students, so he's cheating.
Yeah, Justin.
That are totally sniping this stream here, and they're like, "Oh, I got this all day." And he's not. He's my student.
Hey, Justin, make sure you hit the like button on the video. That's what keeps Chris Capri coming back.
We got a couple stream snipers from my students.
But thank you, Chris.
Stream snipers.
Thank you, Chris, for that, because I had no clue that these options are expiring on Friday, so that makes a lot of sense that we could see a little downward price action toward the end of the week.
Yeah, the like if this has a slow start to the week, then definitely, it'll put more pressure for this to pull back towards the end of the week because a lot of that's unwinding. The slow start would mean that there's just not enough interest. There's just not enough gusto to really push past these upper bounds here. If we start to get really aggressive buying, say mid today or tomorrow, then that might be able to extend past the 38 and maybe make its way to 38 and a quarter. But if we don't start seeing like this turn into a horse race soon, the later it goes into the week, the greater the chance of the pullback on this one because of the roll off in options.
So what I'm hearing in my novice trading brain is maybe sell a little bit and then try to buy back once we hit that lower resistance level, or maybe even play a little call option if we get back down to that 30. What was that level on the bottom there? 35 something?
34, 33. The weekly VWAP, while it's not bad, it's shown a tendency to operate on both sides of it. So it's not saying, hey, this is a line in the sand. And so with that being said, I would probably say if you want to get just long calls or even long the underlying, if we get a dip back to 34, that could be a really nice price point.
I like that.
Yeah.
All right. I like that too.
And again, this is Holly Frontier Corporation, ticker HFC. H is in Holly, F is in Frontier, C is in Corporation.
Thank you, producer AB.
And Jay Rice is saying, yeah, you could do it. You could sell a call butterfly as well. That would definitely be a play on that. Anytime you get in options expiring, you get volatility that's going to go from high to low. Selling call butterflies isn't a bad play on that one there. The call butterflies are a little bit more tricky than, say, iron butterflies. They require a little bit more finesse. And the thing about call butterflies is that a lot of people always talk about, well, the payout on call butterflies is fantastic, but that's only if you're closing at the top of the tent. And 80+% of call butterflies or put butterflies do not close in that upper portion of the tent. It's usually around the mid-range, if they get to the profit. So because call butterflies, even though they're 3 legs versus the iron butterfly, which is 4 legs, are trickier, I still find iron butterflies to be a much more straightforward play. So that's why for students who are a little bit less experienced, I'd recommend more iron butterflies. So maybe looking at the numbers, we're seeing a lot more 2s than 1s.
Yeah.
And so I feel like cool on that. Thank you for the heads up and letting me know where you are. We should probably do a day where we just kind of explain iron butterflies, instead of like, yeah, on a Monday, we find, a bunch of charts that are kind of range bound and why we think that'll work out. And then we can just like, hey, today is all about iron butterflies and how to trade it.
Tune in this Monday, pay-per-view. We're going to waive the fee. Chris Capri is going to be there. Iron butterflies. So let's do one more pick from chat. And plan on that. Put that on your calendar, guys. Put it on your little Palm Pilot. Monday. Iron
Eric
Butterfly Day.
He's a student of mine. Constantine, he's a student of mine. Good. My students are smashing like. We're past the 100 mark. Nicely done.
Good.
Nicely
and
done.
if we hit 250, that's where things get weird. Trust me. So try to get up there.
I'll have to sign off by then.
Guys,
Okay.
what are your tickers?
First ticker call, I will take it. No trade ideas? Justin Goodman saying, can we use open interest in FX the same way we do in equities? Not quite. Yeah, not quite. Sorry for the takeover. Yeah, not really. T cutting their dividend is such a sad thing. I know. It's like 6+%. I don't know how they were able to maintain that to begin with. Disney. Webcoin wants to look at Disney. Deal. Okay, and so yeah, the cutting the dividend is a big thing. I think that's part of the reason why it's selling off aggressively. Okay, so looking at open interest on Disney, we have roughly 700,000 calls and almost 600,000 puts. So slight, bias to the call side. The top open interest call right now is kind of clocking in around 200 and the top is around 185. We have about 22% of the gamma options rolling off, but not this Friday. It's the June monthly expiry. So there's nothing short-term from an options perspective or order flow perspective in options that should materially affect positioning and price. So there's not a lot of, another way to translate this is there's not a lot of short-term speculators when it comes to options in Disney. It's a little bit more, further out. People are a little more patient on Disney. So with that being said, what am I seeing here? I honestly, like when I look at options positioning, I think Disney's got a little bit more to go. But I think once we get to this little spike low here, I think 161, 160, I think now Disney becomes an interesting buy. So you have this kind of impulsive corrective move here. Dip buying finds liquidity and launches higher. But then we keep getting these wicks here saying, around 200, it just becomes too hard to get past this here, basically. Could have been a lot of gamma hedging. There could have been all kinds of things that option dealers are like, you're not going to get past here, really. And we know that since the top open interest calls right now are 200, there probably wasn't a whole lot of people speculating Disney is going to get beyond 200. So after kind of a little bit absorbing from the sellers here, rolls back and just breaks out heavy last week. This week, it's opened and it's sitting on the lows right now in true weeks. So this is from the open. It's been sold right off the bat. I feel like we're probably going to lose the 168.91 support area here. I think around 160 to 161, Disney becomes a very interesting buy. Right now, the top open interest puts are 185. We're past that. So right now, puts are in a good position, but they're going to be monetizing that pretty soon. Puts tend to decay a lot faster than calls. So puts are going to get monetized faster. I think the deeper we get closer to this, the more they'll start to monetize. That will relieve some of the downside pressure. And then I think there's a potential for a bounce on Disney. So maybe this week, maybe next week, we get to 161, 160. And I think at that point, it might be a decent time to go long calls if IV is below 35 or 40%. If it's not, then I think you have to do a bull call spread on this one here for like a 161, maybe a 167. Be a decently wide bull call spread. There should be a good profit on that one there. If we reclaim the following week, like if we get down here and then we reclaim and we have a bullish week next week and we close above 169, 170, then that should relieve some of that, more of that downside pressure. Any puts that are not monetized are going to get monetized really fast on that bounce. And so then I think there's scope for this to return back to 180. But as we get closer to 180, 185, I think Disney starts to struggle. I think somewhere between probably 170 and 180, 185 is a fair value for Disney for this summer, for June, maybe July. That's kind of when I'm looking at Disney.
All right. Let's hit another one.
What's the next one?
Yeah, let's hit another one. You want
VSTO? Jay Rice is saying HFC options not that limited. Yeah, we mentioned it. There's only roughly 40, 50,000 options on it. So not a whole lot on HFC. That's why I'm kind of hesitant about that one. So we have, I'll let you guys pick. We have ZIM, SMH, BBY, or MNST.
I kind of want to see the SHIB.
Which one you want to see?
SHIB. Do you look at cryptocurrencies with your group?
I do, but I don't have really a way to trade it through my platform, Thinkorswim. So yeah, please CCIV. All right. So should we do a CCIV or let's do a FUBO? FUBO. Probably run through this pretty quick. So, okay. FUBO. Feels like a good dog's name, FUBO. Dogs, by the way, only can understand 2 syllables. If you give them a 3-syllable name, they won't understand it. So always give your dog a 2-syllable or 1-syllable name.
Wow.
Note for reference there. So studied neuroscience at the university, and we had to study dogs and cats. Okay, I think FUBO supported at 20. I think we're getting into pretty good value here. I think anywhere between this 16 and the monthly view up around 1873. I think FUBO supported. I like it. I'd like to be long here. Yeah, I'd like to be long on minimum monthly view up 1882 and anywhere between the 17 and 15. I think FUBO will continue to find a bid. If we look at the selling probably in a 4-hour, we might see it a little bit more nuanced here. So yeah, okay. So what are we seeing on FUBO? Let's look at the price section here. So FUBO, it's a good name. It's a good dog name. So impulsive breakout, finds a bid, rips back above into the impulse or prior corrective section here. But then we get more aggressive selling in it. And look at this. This is aggressive selling. Normally when aggressive selling stops, there's a transition sideways. It doesn't just like spring, higher like this. But yet in one session, it went from 14 to 22. That's a big rip. Now, it could have been earnings. It could have been news. It doesn't really matter. The bottom line is somebody was saying, look, this is incredibly undervalued. This is the second time we've gotten below 18 and it finds a pretty good bid and recovers it. Even after it pulled back a little bit, found a bid back at 18, rip back higher. So to me, FUBO, I think on an 18 to maybe 15 area, it's a buy. I'm not long right now, FUBO. We had FUBO a couple weeks ago, but I like being long FUBO between 18 and 15. So I'm going to set some alerts there. The thing about FUBO is options can be somewhat pricey because of the implied volatility. So real quick, looking at FUBO. I look at June options. Yeah, IB's clocking in at 90%. That's high. So you ideally would want to sell more options than buy. I think if we can get to, so looking at a sell options play, maybe wait till you get to 16 and then sell a bear. You could do a bull put spread on this one here. So you could sell the 15 and buy the 13 basically. And so basically the way that works out is, you could do that if you wanted to. That would be a potential play. Yeah, a bull put spread. You could sell a bull put spread on this one here.
Let's do one quick survey. Everyone, if you're comfortable with constructing a bull put spread, give us a 1. If you're not quite comfortable, give us a 2.
Dog doesn't like you.
Yeah,
your dog
you're pissing off the dog with 2 pen. We don't do that.
Somebody's upset about the dog thing here. I give my dog a two-syllable name, but he still ignores me when I call his name. Training, my friend. He needs training. Okay, so people are a little bit more confident on the bull put spread. The iron butterfly was like 70% skew, not comfortable.
Yeah.
But now we're seeing like a 50-50. Okay, totally cool. That's good. So we could definitely, maybe next Monday session, iron butterflies, maybe the session after that, we can look at spreads. We can pick 2 different types of spreads. Maybe bull put spread and we could do bear put spread.
Love it.
Yeah, a lot of dog comments still.
All right, guys. Apologize to your dogs on behalf of me. I'm really sorry about this guy. You never know what he's going to say. Chris, thanks for being with us again on this fine Monday.
Good seeing you guys. Be well.
You too, man. All right, guys. Second Skies Forex. Go on and get over there. Last time Chris was on, I went over to the YouTube channel and I hit that subscribe button. Make sure you guys are doing the same. Yep. So you guys know the drill. We are approaching the end of our little program here. I want to thank everyone for tuning in on this fine Monday. Aaron, what's up next after this?
We have Moon or Bust.
Moon or Bust
crypto. We're talking altcoins. We're talking Elon. We're talking SHIB. We're talking Doge. We're talking coins. We're talking coins that you didn't even know existed.
Exactly. We are digging through the cushions of the blockchain and finding coin opportunities that you can use. So stay tuned to learn about how the wild world of cryptocurrency and blockchain technology works and how you can use it to your advantage to grow your portfolio. Anyways, this has been the Monday edition of Get Technical, where we always have Chris Capri here with us. We're going to have to talk to him about that dog thing. We're really going to have to talk to him.
You know what? Next Monday, we'll do a little check-in on HFC.
We will do a check-in. We now, as a community, are producer AB's support system. His
My
guidance,
portfolio managers. I got 310
managers.
of them right here.
And just a reminder, the show is for informational and educational purposes only. Some of the assets mentioned on the show may be owned by the show participants, hosts, etc. So anyways, I'm Neil Hamilton. With me as always has been producer AB. Earlier was Chris Capri. Second Skies Forex. Make sure you check them out. secondskyforex.com. Up next, Moon or Bust, all about cryptocurrency. Stay tuned, stick around, smash that like button, and as always, Happy trading.
Happy Monday, traders.